Welcome to the Swing Trading with Cycles channel. We're going to do our update on Dixie today. It is March 11th, 2023. It's the weekend update. And Dixie had a pretty violent move this week, as did most of the markets. And generally understand Dixie moves inverse to the markets. Generally, that is. So when Dixie is moving up, markets are moving down. That is the general relationship. Obviously, it doesn't always work out that way. Let's start with the daily chart. If you're new to the channel, welcome. Take a look at the pinned comment. A lot of good background, important background about cycles, price action, etc. Make sure you get up to speed on that. Swing lows and swing highs are a particularly important thing you want to make sure that you understand. So for the US dollar index, thinking about the daily cycle, so first off, context. This high here on Wednesday, September 28th, 2022, was most likely the 3-year cycle high. Since that high, we have been in a downtrend, and that downtrend, this is your daily chart again, that downtrend has extended to the highest time frames. So we're trending lower, I should say, on even the quarterly chart. Now, we have started a little uptrend on the daily chart. You can see I'm drawing this right now, right? After this pretty gnarly move down, we're now trying to reverse it. We've made a high, and I'll delete this now. You can see a really important piece of this is that we were able to get back above this high here, which is one of the things, you can kind of think of it as like on this like huge slide down, there were just a few rallies, and they all got snuffed out. They all got snuffed out eventually. Look at this one, got snuffed out. This one snuffed out. This one snuffed out. This one snuffed out. You can see that. This is one of the more significant rallies. Let's see, what is that in percentage terms, just for context? So a little 2% rally, which is a lot for the dollar. So these are all swing highs. That's another way to think about it. That's a swing high. That's a swing high. This is a big swing high. Getting back above this is going to be really crucial, and that is above 105.631. Notice what price did when it got to there. It poked its head above. We actually closed above that price. You can see that's the body of the candle from Wednesday. But then the next day, it just puked below it. But here's the important piece, though. This is your Friday candle, the jobs number. Unemployment rate went up slightly, but it was more jobs there were more jobs created than expected. And then you also have this collapse of SVIB, which has people thinking contagion. Other banks are going to also have issues, and so maybe that takes the pressure off a 50-point rate hike, a 50 basis point rate hike. We'll see. But practically speaking, Monday, and we talk about this all the time on this channel, it's a super important thing to understand tactically. Where is a candle likely to open in the context of the other candles? And so in this case, we're almost certainly going to get an inside candle, at least to open. I'm not saying that's where we close, but at least to open an inside candle on Monday. Now, or it really will start trading Sunday night, because unless we like gap down below this range, we're obviously gap above it. And so that range is a high of 105.352 and a low of 104.039. So a pretty big range for the dollar. That's a range of more than a dollar for the dollar. That's pretty significant. And so what the implications here are that at one point it looked like this was your daily cycle high at day 17, and you could even argue that this was your little low and now blast off. But it could be that this was your daily cycle high now and we're moving into a daily cycle low, or this was it here, because this is actually an undercut. So what was a low here? 104.039, as we just said. And what's this low? 104.123. And that's 104.094. Yeah, so that is your lowest low. So that could have been it. Like, it just made its daily cycle low, which the implication there would be that the next move for the dollar is higher, which would theoretically put pressure on equity markets and precious metals, of course. So that's the daily picture. And in this case, it wouldn't be day 17. How long a cycle would that be? So that would be 24. Now, obviously, it would be a really short daily cycle decline if that were the case. But so we'll continue to watch this. And as I say oftentimes, the cycle counts are a little bit less important than understanding the price action. And we'll look at the lower time frames, but like this was a big rebound for the dollar after a collapse early. And let's look at that lower time frame, that hourly chart. So that is when that's when the number was released. So that's important to see. Woof. The Dixie took a bath after the number was released. This is an hour. These are 15-minute candles. So that's the 15 minutes right. Like this is between 8:30 and 8:45. And so if we zoom that out to an hourly view, you can see that's your 8:30 candle that the 15-minute candle is a part of. And then you had big follow through the next hour, and then big follow through the next hour. This is a pattern that you see often. It's weird. It's like these, like basically 3 candles in a row. So you can see that's a big down candle, lower low than this. This is a big down candle, a lower low than that. And this is another big down candle, lower low than that. But then what do you have? A reversal. This hourly candle makes a higher high. This candle just consolidates. Then this one makes another higher high. And now you have 3 hourly candles that have been consolidating at the upper end of the range. So this is clearly forming a little uptrend on the hourly chart. That's the way that you want to think about. That's the way that you think about this. Price action always starts at the lower levels. I mean, if you think about it, it makes sense. You can't have a uptrend on the daily chart until you have an uptrend on the hourly chart. That's where it starts. And so we're gonna have to see where this thing goes. Obviously, it could be building up for another lower high. You always have to think about both sides of the potential. Now, most importantly, the weekly candle, the weekly chart, we've been talking about this idea that, remember, this is your 3-year cycle high. This is just it on the weekly chart. And the expectation is this is just basically a big bear flag at some point waiting to collapse. If we just do the simplified view, look at this big downdraft. So that was a whole weekly cycle decline. And now we're having a weekly cycle rally. Maybe it gets up to there. That we would expect would lead to a lower low. We get maybe one more weekly cycle rally, and then a final low into our 3-year cycle low. That's not a prediction. It's a scenario in the sense that we know we're in a downtrend on the highest time frames. And so it's logical to expect a lower high here, which would be, which after a lower high, you would get a lower low. And so it's just a matter of how long is this weekly cycle rally going to continue. So this was your week 35 low. Again, this was one big cycle. And notice this low is actually lower than this. It just undercut that by a little bit. We talked about that in previous videos. Pretty amazing price action there, like kind of textbook. Right, like once this decline starts, we talked about the fact that like this is the logical pivot you would think it's going to take out, and if it once this gives way, you expect it's going to come down for this cluster of pivots as well, and maybe even this cluster. Of course, instead of doing that, it rebounded. So it's always important to see what does price do when it gets to that key pivot, and we've got a weekly cycle rally on our hands. How many weeks has that been? Week 1, week 2, week 3, week 4. So this was week 5 that made a higher high. And so you think about the different scenarios, and this is just a weekly version of the daily chart that we were just looking at. Again, that's the multiple time frame analysis. Same way that the daily is going to be an inside candle, the week is going to be inside pretty badly. I mean, this is a big doji week. It is an outside weekly candle technically because we did make a lower low and a higher high, and we closed green, but only barely. And so we're going to be inside that range all week, or we're going to open inside that range. And so we're going to be watching. That has big implications breaking out of that range for the weekly cycle, because that tells us maybe we're going to have a weekly cycle rally of more like 8, 9, 10 weeks. That could happen, and it could still be bearish. Like you can see, we could have we've had really long weekly cycle rallies, like 26 weeks. This was a relatively short weekly cycle, but a long rally at 17 weeks. The one before that was 17 weeks. So I guess the way I would think about it, you're definitely not expecting this to be 17 weeks. But there's a lot of numbers between like 5 weeks and 17 weeks. Like we could run for 12, for instance. So this is going to be really interesting to watch, especially again because of its correlation with the equity markets. And if we look at the monthly chart, finally, and let's scenario plan that actually. Let's say we get a 12-week rally. Let's just, um, that seems unlikely to me given what we've seen from other um, 3-year cycle declines. But that would give us a high in at the end of April, which would probably coincide with a low for gold, for precious metals, and the equity markets. So that actually could make sense. Yeah, I mean, we're gonna watch the price action as always. That's all we can really do, right? And finally, the monthly chart, and we'll look at the quarterly. We'll roll this up to the quarterly as well. You can see it's just consolidating up here, but at the upper end of the range. So this candle right here is serving as a potential, this is the weekly reversal candle. This is just the monthly version of that. Again, that multiple time frame analysis. And this is the higher time frame view that you can see the 3-year cycle high. I mean, look at that. We had this crazy rally up, and then we had a big swing high by breaking below the high of this candle, the September candle, on month 20. So this reversal is happening on month 25. The expectation was that we would have a 3-year cycle, a cycle that's like more like 35 months. So you're doing something like this, and then into a low like that. Again, unclear exactly how high we'll go here, but this number isn't random. Think about this. This is the swing high from the monthly chart that gets activated. That starts at 107.680, and I mentioned this number on Twitter a few times. That's where price needs to get above there. So imagine, just to be super clear, a move like that. That would tell you something different might be happening, right? Like, because we're now above inside the range of this candle. That's what we would need to see at this point. At the same time, if we continue with a weekly cycle rally, you would expect that it's increases the odds that it does test that level. But again, very possible that what you end up with is something like this, boop, which will make this a great short. And the vehicle for that would be UUP, which is what I play. So that's the update on the Dixie. We will leave it at that. Thanks for watching.